All in, making money in stocks. Today I'm going to be talking about the stock market and making money in the stock market. My current investing strategy is long-term buy and hold with property, index investing, that's in the stock market, and crypto. But things are going to change as I'm about to start investing in single stocks. So that would be property, index investing, crypto, and single stocks. Anyway, in today's video, I'm going to be talking about 1, quick, easy money in the stock market. 2, the emotional investor. 3, the neutral investor. And 4, investing with skill. With any investing, you've got to put the work in. Do the research, put the graft in, and then you can invest with skill. Right, let's get stuck into the video. Quick, easy money in the stock market. Me and single stocks have had a bad relationship in the past. Basically, I was shit scared of stocks, single stocks, between 2011 and 2019. To cut a long story short, it's because I lost £8,000. I lost my life savings between 2010 and 2011. Don't invest because of what your taxi driver said. Don't invest because of what your hairdresser said. Don't invest because of what the lads or the lasses are telling you to invest in. And don't invest because of what people at work are telling you to invest in. That's what I've done. I invested because of what people was telling me offshore. I ended up investing into offshore companies and it didn't go to plan. Like I said, I lost £8,000. Money I simply couldn't afford to lose. Please don't do this. Don't steam in without putting the work in. What I'd done after 2011, between 2011 and 2019, I buried my head in the sand. It was good for my mental health, but it wasn't good for my bank balance. I missed out on some serious returns. And what I'm going to do now, I'm going to tell you what I would have got if I'd have simply invested into an index fund. If I'd have put my money into an index fund tracking the S&P 500. The S&P 500 is basically 500 of the biggest companies in America. So what returns would I have got if I'd have put my money into an index fund between the years 2011 and 2019? Potential returns from the stock market. So the example I'm going to use to demonstrate stock market returns between 2011 and 2019, I got this info from Irrational Exuberance by Robert Schiller. So if I'd have put my money in the stock market between 2011 and 2019 in an S&P 500 index fund, this is what I would have got. £10,000 invested in the S&P 500 at the start of 2011 would have been worth £30,519.84 at the end of 2019. This is assuming you left the returns in the index fund to compound over the 8 years. Compound interest is worth taking notice of. This is a return on investment of 205.2% or 13.2% per year. So instead of burying my head in the sand, if I'd have invested in the stock market, I'd have got 13.2% per year instead of the 0.5% I got from investing in premium bonds. So learn from my lesson. If you get a loss in single shares, dust yourself down, read a few books, put the work in, and learn how to pick stocks. Learn how to invest in the stock market. You can do this by investing in index funds, and these are the type of returns you would have got between 2011 and 2019. The emotional investor. That little loss on single stocks between 2010 and 2011 hurt me badly. And it led to me having a really bad relationship with money. I was too emotional, like checking in on my stocks every 5 minutes. Please don't do this. It's not good for your mental health. It wasn't good for my mental health, and I don't advise it at all. If you're too emotional with money, you won't make any money. Worst case, you'll lose all your money, like I did back in the day with single stocks. In the middle of 2018, I made a decision. I was sick of being shit with money. I was sick of whinging about money. Where does all our money go? That's all I used to say to my wife. Where does all our money go? Blah, blah, blah. I was sick of myself. I was sick of whinging. So I made a decision to do something about it. And at the start of 2019, I got into personal development, started learning about money. I started to become financially literate and things improved. And when I was looking back on the way I'd invested previously, I quickly realized that I was an emotional investor. So because of this led to investing in index funds. And thankfully, I've been doing this for 3 years and I've managed to keep them emotions away. I've managed to invest in the stock market via index funds without getting too emotional. So what I'm trying to tell you is, don't be too emotional. Don't check on your stocks every 5 minutes. One of the ways you'll be able to tell that you're an emotional investor is that you're checking on your investments too much, like every 5 minutes, like I did with single stocks back in the day and more recently with crypto. Don't do it. Don't do this with any investment. Take it from me, being an emotional investor leads to very, very poor results. Try not to be an emotional investor. Please, it just leads to pain. The neutral investor. Now, this is what I've been trying to become over the last 12 months. Because I was aware that I was an emotional investor, like checking on my stocks every 5 minutes, like checking on my crypto too much. So I've been working on it over the last 12 months, like checking on CoinMarketCap less, much less, like every few months. Now with crypto, I've zoomed out and I'm thinking long term. I'm not checking my crypto every 5 minutes. We're in a bear market, so if I was to check every 5 minutes, it would just lead to pain and misery. I'd be sick as. So I've zoomed out, thinking long term, and this is one of the ways that I'm trying to become a neutral investor. Not getting too excited, not getting too worked up over my investments. Now, over the last 12 months, I've been considering Forex trading or maybe trading stocks to speed up my journey towards financial independence, to get higher returns than I'm getting with my index investing. This, I feel, is a legit way to get financial independence or push it towards it, but I've got to be careful. Am I too emotional to do day trading, Forex trading? I probably am. So my thinking is, I'm gonna invest in single stocks and I'm gonna sell them when they get to 20 or 30%, if they get to 20 or 30%. And if they drop, if they don't do very well, I'll cut my losses at, say, 5 or 6%. This is what I'm thinking. So going forward, I'm going to be doing property investing, index investing still, crypto and single stocks. And this is what I'm doing at the moment. I'm laser focused on the stock market, on learning how to invest in the stock market. Because if you don't learn about it, then you're just going to make mistakes like I did back in the day, back in 2010, 2011, when I lost my life savings. Don't do it. You've got to learn about it, become financially literate. And for me personally, the more I learn about single stocks, it's another string to my financial bow. It's making me more financially literate. And I feel, from what I've read, from some of the podcasts I've listened to, that if I can get good at picking stocks, it's going to accelerate my journey towards financial independence. And this is what I'm obsessed with. I'm busting for financial independence to give me more options. So I've got more freedom, more financial freedom. I can spend more time with the people I love, doing what I love. This is what I want for me, and this is what I want for you. So yeah, this is what I'm doing at the moment. Trying to be a neutral investor. I've been working on it for the last 12 months, and I'm really focusing in on learning about stocks, learning about picking stocks, how to be a skilled investor. That's what I want for me and you to learn about money, to learn about investing, and then invest with skill. Investing with skill. Whatever you invest in, you've got to put the work, and I said it at the start of the video, you've got to put the graft in, do the research, then you become financially literate, then you can invest with skill. Then you can make life-changing returns and become financially independent. But when I mention research, mention financial literacy, the people that I know, my friends, my family, my colleagues, they get bored. They just want quick, easy money. 10x, 100x gains within the week. They're not interested in learning about money, definitely not now because there's a bear market, markets are crashing, no one wants to know. Now for me, this is the time to double down on your financial education. Learn about money, learn about investing, and then when the bull market kicks in again, you can profit from it. You can make life-changing returns. Look, all the news is bad at the minute. Just try and focus on being the best investor you can. So when things turn around, you can invest with skill and you can profit from the next bull market. Please don't get gripped by fear. I know it's hard. This is what happened to me in 2008 and 2009, and it led to a negative decade. Me being bad with money, bad with investing, led to poor results. Instead of investing in the stock market, I buried my head in the sand, ended up putting all my savings into premium bonds, and I got 0.5% interest. And as I said earlier in the video, I could have made at least 13% if I'd have just put my money into an index fund. Now imagine I was a skilled investor, I knew how to invest in the stock market, into single stocks, I could have got even bigger returns. So don't get gripped by fear and don't settle for less than 1% in your high street bank. You've got to try and invest, at least try. Put the work in, become skilled, and work towards becoming financially independent. So that's about it for today's video. If you've liked today's video, give me a thumbs up. If you've really liked it, subscribe to the channel and help me get it out there. Help me help other investors. Help me help investors learn from some of my mistakes so they can have a smoother journey. That's what I want for you. I want you to have a smoother journey. I don't want you to have to learn the hard way like I did. So yeah, thanks for listening.